What's up traders? Welcome to another video. As a trader, especially in the beginning or even for the experienced trader, when we take a trade, in most of the time we stay in confusion. We think that, well, is this a good trade? Did I make the right decision? Is the trade will work out well? There is a lot of question comes up that sometimes affect our trading. Sometimes we close the trade immature, or maybe we made a bad decision because we are in a confusion. So to remove that, in this video I will discuss what is look like a perfect trade setup, and also I will discuss with proper examples what are the elements of a perfect trade that you should consider. Now, if this is something you are interested, then smash the like button for me, and also subscribe to the channel if you're new. Press that bell notification. I am Forex Wizard. The wizardry in this channel you will find including live analysis and strategies that I post every single day that will change the way you trade. With that said, let's begin without further delay. Okay guys, so first let's consider what is a perfect trade setup. Now, there is no perfect trade setup.
Yours too? That's so weird!
Well, you might be thinking, then what is the point of this video if there is no perfect trade setup? There is a gas in chemistry which is called the ideal gas that you might have studied already. So the ideal gas, in fact, in reality, there is no gas like an ideal gas. But the gas which is closer to ideal gas is called a perfect gas. Similarly, though there you may not find a perfect trade setup all the time, but the trade that is more like a perfect trade can give you a big edge over the market. So that is the point of learning how to find a perfect trade setup. So because trading is a game of probability, remember, therefore the trade that is close to an ideal trade is what is called a perfect trade that we already discussed. Now let's find out what are the elements of a perfect trade setup, and then I will jump onto chart. Will show you a couple of examples what is look like a perfect trade setup. First, let's learn the elements. You can print that elements, keep it with you before you take a trade. You can check it out. That will be really helpful to you. So the first element is trend. Remember, trend is your friend all the time. Now this is the most important part. Remember, most trader trade against the trade. I don't know why, but I also did when I started trading. This is the human psychology that works. I don't know why it happens like that, but you need to train your brain to find the direction of the trend, to find a proper trade setup. So this is the first element. I will show you in chart, but let me explain the theory. You can print this theory so that you can keep it with you when you are trading. You can use this for your trade. The second element that we will be considering for a perfect trade is area of value, support or resistance plus trend line. So we need the trade signal to be both support or resistance plus trend line. So say for example you saw a pin bar here like this, okay, that has to be in a extreme area of value, either support or resistance with a trend line. Both confluence should be in the same place for an ideal trade. So the next element for a perfect trade setup is risk reward ratio. Remember, 1-to-1 risk reward will never make you profitable. Just short term, this may give you some amusement, but if you want to be a profitable trader over the long term, you need risk reward ratio. In some cases I trade also 1-to-1, but when the trade is a very high probability, but maybe I need to get out of the trade in a very short term for some reason, could be weekend or any reason, then I trade 1-to-1. But when I see the 95% or 90% possibility that this is happening, but if you trade all the time 1-to-1, that over the long term may not make you profitable over the long term. So what is the next criteria? Clear entry signal. You should find a clear entry signal with a pin bar or doji or whatever price action pattern you like to trade. You need a clear entry signal in this perfect trade. Another criteria is multi-time frame confirmation. This is also big one. You should look at, say if you are trading on the daily time frame, you should look at weekly, monthly, they should be aligned. So if you are trading short side on the daily, weekly should be short, monthly should give you bias to the downside. Similarly for long trade, same way. So that trade should be supported by multi-time frame confirmation. So the last one is false breakout. Now this trade that you are taking, let's say you are taking a trade from here. Say this is a resistance, there is a pin bar below this resistance, and you think that this price will go down. Now what I would consider is very important that you should see, if you look at the left, you should see somewhere near there should have a false breakout with this pin bar, or maybe with couple of bar before this pin bar. If you see a false breakout before this pin bar, then there is a high chance that the price will go with a huge momentum, because this is what happened when there is a false breakout. That means it has grabbed enough liquidity, it has a momentum, and it might go a lot. That is the big one, false breakout. So this can be an ideal trade setup, but as I told you that you may not always get a setup like that, but close to this, or even if all these criteria fulfill, then definitely it's a perfect trade setup with a high probability. Now let me show you couple of examples that will confirm this criteria, and then you can work out when you are trading. Keep this paper like this printed with you, so that like this one printed, so that you can check it out when you are trading. Okay guys, so let's see this example on British pound US dollar on 4-hour time frame. Now let me ask you a question. If I tell you that what you see clearly visible, which candle catches your eyes in this zone, now definitely you are going to tell that this candle catches your eye, right? It's clear, it's a clearly visible candle, and that is what is a perfect trade setup. Now let's find out, let's match all the criteria, and we'll see why it is a perfect trade setup. First of all, what is the trend? The first criteria is trend. So what is the first criteria? Is the trend. So this is the first criteria, and the trend is clearly defined to the downside, creating a series of lower high and lower low. So this is a clearly defined downtrend. Okay, and this is the first one. The second criteria is area of value. Now in this area of value, we need two confirmation. The first one is support or resistance. The second one is it has to be on a trend line. Now let's see this one here that we see, it is in a support or resistance. If you draw this line here, what you see, this is perfectly defined support and resistance. Why? If you see this here, what you see, there is a clearly defined support here. The price went there, created a double top here, and then dropped to the downside, broke this level. Now it tested as a resistance here, and resistance, and broke above, and then finally dropped to the downside. So this is a clearly defined resistance. So this pin bar is formed in a level of resistance. So we have another criteria fulfill, which is the area of value with support and resistance. Now we need to see if it is on a trend line. Now let's draw the trend line on this pin bar. Now see, the best way to see a trend line with 20 period moving average, that is what I do normally. It is a dynamic trend line. If you draw a trend line by line, it might sometime go in a wrong direction. So it is on a trend line, but you see this blue line is what is a 20 period moving average, which can provide a dynamic resistance. So the price is on a trend line, clearly on a trend line. So resistance, trend line, this is the meeting point, and this pin bar is formed in this important zone of area of value. So this is also confirming our element. Another element is risk reward. Now when, say, let's replay this chart, when the price was here, you don't know if you trade this one. Say for example, if you enter from here, keeping it stop loss above this high, you don't know how much it will go, but you know how much risk to reward you should achieve. Now let's zoom out the chart and see that, you see, this is a clearly defined overall downtrending market. It's a long-term downtrend, right? Now when you are trading, where should you put your profit target? Definitely at least to this level we can target, because you see this, the price when was going down, it created a double bottom here and then broke to the upside. So this is the neckline of this double bottom, which is a resistance. So this price should come at least to this level to test this as a support, even going up or maybe going down, whatever, but this should be the target. So if we take this target, let's see how much risk to reward we are able to achieve. Entry here, stop loss above, and take profit here. So we can easily achieve 1 to 5.5, which is a huge risk to reward. I would say that 1 to 2 should be enough for taking a trade. So we have also risk to reward ratio in this trade. So let's see, another criteria is clear entry signal. So what is a clear entry signal? Now entry signal should be a candlestick pattern that you want to see. Could be a doji, pin bar, hanging man, shooting star, whatever you are trading. But this one is a textbook pin bar. See this, let me delete this, all this, so it will be clear. So there is a, this is a clearly defined pin bar. You see, long wick and then a narrow red body. It's a proper pin bar or hammer, whatever you want to say. So this is a clearly defined entry signal, right? So this is the criteria that is fulfilling. Another criteria is multi-time frame confirmation. Now this is the 4-hour time frame, right? Let's see on the daily time frame. Now what we will confirm on the multi-time frame, we will confirm about the direction or the trend. Now on the daily as well, what you see that the price is going along this trend line and perfectly it is aligning on the daily time frame. It's a downtrend, we are trading to the short side, perfect. And also on the daily, you see it has broken the previous day's green doji and then returned to the downside. So it's a big one on the daily time frame as well. On the weekly also it's a perfect trade. You see, this is the weekly trend line. The price went high above this very important zone and then rejected to the downside. So this is also on the weekly as well, it is going down. So we have a multi time frame confirmation for this trade. Now let's see, the last one is false breakout. So this one is sometime you might find hard to find, but that is the one that will give you the most edge over the market. So you see that, let's draw this support and resistance again. So this is let's draw it here. We can see a clearly defined, you can draw it here or here, all this area of value. So what you see that this pin bar broke all this level above, even this level as well, and then closed back below. So this is a strong level of false breakout. So when you see this kind of false breakout, you can expect a big move to the downside, and that is what happened. The price without hesitation broke to the downside, created a very big move to the downside. You see, if you take this trade, that could give you a big edge over the market. So this is the end of this. So far the price came down, but this is a big trade. You see, all the criteria, all the elements is fulfilled, and that is what we can say a perfect trade setup. That means that there is perfect trade, but the only thing is that our mind stays so busy when you are trading, it's sometimes hard to pick the perfect trade. But when you memorize all these elements that I have given you, and you see that most of them are satisfying, you can, if you have a existing strategy, you can integrate this criteria as a rule in the strategy and then stick to it. I'm sure that you will never lose money in trading if you can stick to it with proper discipline. Now let's see another example where you will find a perfect trade setup. Okay guys, so let's see this example on Aussie dollar on the daily time frame. Let's see this proper trade setup, and then we will find out the criteria and see how it is fitting to a perfect trade setup. Now this one, you see this, if I tell you in this zone which candle catches your eyes, it's clearly seen this one. Okay, anyone can, even new trader can spot this trade signal. So that is what we call a perfect trade setup. Now in this perfect trade setup, let's see why it is a perfect trade setup. Let me replay this chart and then we'll find out. First of all, look at this candle here. It's clearly visible, standing out from all the candles. So the first criteria is trend. Now what you see that a Aussie dollar was going up for a very long time, and then what happened? It's a very big head and shoulder. It's on the daily time frame. 2 times it has created a head and shoulder, quite a few false breakout, and then finally broke to the downside. So this is a clearly defined trend change. So we can say that Aussie dollar changes its uptrend to the downtrend and then broke to the downside. So it is a freshly started downtrend. It has a huge momentum in it. So with that said, now after this downtrend broke to the downside, created a retracement and then again break, and then this one, it has created this long weak candle. Now why we pick this one as a perfect trade? Because it has an element of false breakout. This is very important. So trend is down, that we already have seen. It's clearly defined downtrend. The first criteria fulfilled. The second criteria is area of value. So we need to confluence in an area of value. Let's draw first the support and resistance. So this is a very important level of support and resistance both. So we see price created a support here for this big consolidation. There is a support here, and then it acted as a resistance here and then resistance here. So what this long wick candle did, that rejected from this level of resistance, creating a false breakout. This is the first criteria, support resistance. Now draw the trend line and see if it is on a trend line. Let's draw it in this way. So you may not get a proper trend line, as I told you, by a straight line, but if you consider this 20 period moving average, which can act as a dynamic trend line, it's just broke this 20 period and then closed back below. So both zone is meeting together in one point, which is a high probability trade setup. So the second criteria fulfilled. Third criteria, risk to reward. As I told you that when you are trading it, you don't know where it will go, but based on the past, what you saw, there is a big consolidation with quite a few head and shoulder. So it is highly likely that it will go down a lot. So you can target, at the mathematical figure, maybe to this zone. So 1 to 2, 1 to 3, 1 to 5, based on your strategy, but definitely should be more than 1 to 1. So this is another criteria, risk to reward, that is fulfilled. Clear entry signal. Now some trader might be trading this long wick bearish engulfer, but to me, I would wait for this one. So normally after a bullish or bearish engulfer, I wait for a doji to be formed, because this is where you can have a narrow stop loss with a proper risk to reward. But it's okay to trade directly this bearish engulfer or whatever way you want to trade or in your strategy. But it has a clearly defined signal with this bearish engulfer or with this doji. Both are valid entry signal. So first of all, those who don't know what is a bearish engulfer, just quickly. So the bearish engulfer is a candle that normally engulfs the previous candles completely. Say for example a candle like this. So if it engulfs the previous one completely, that is what we call a bearish engulfer. But I have a completely separate video about engulfing pattern. I will link it above, or I will put a link in the description. You can watch that. That will give you a bit more clear idea of what is look like a bullish or bearish engulfer. So this is another criteria. And then multi-time frame confirmation. So you know that there is a big consolidation. It has a clear multi-time frame confirmation, but let's see on the weekly how it looks like. So if we jump onto the weekly, what you saw, that weekly it has a clearly defined head and shoulder pattern, and then broke to the downside, tested this previous support of this head and shoulder as a resistance. So all this in your favor. So that means that multi-time frame confirmation also bearish. So we have this one as well. Finally, false breakout. So you see that it has a clear element of false breakout. This long wick candle broke all this level up. You see there's a support here, resistance. It broke this one and then closed back below. So it has a false breakout as well. So this trade also satisfy all the criteria that we need for a perfect trade setup. Now if you entry say from here as well, keeping your stop loss above this wick, let's say you wanna trade 1 to 3, okay, it would be a big trade, but without any question this trade will work out very, very well. So that's how you can find out a perfect trade setup based on this criteria. I sincerely believe that this video was helpful to you. If you find value in it, then don't forget to like, subscribe, and also drop a comment below. Share this video with your friends if you find value in it. Thank you for watching. See you soon in my next one.